AI stocks are about to go parabolic. I mean, stupidly high. The Fed already turned the money printer back on, and the real secret, banks are setting up for a monster breakout while no one's looking, right? No one's talking about banks. The market is primed for a melt up, and if you're not positioned, you're going to miss the easiest money of the decade, even easier than the latest 20% run in the market from the lows of April. We told you about this, that we were gonna hit the number. We finally hit the bloody number, ladies and gentlemen. We're back in extreme greed. How high can this go? Throw it down in the comment section below. And while you're down there, hit the like button. It really helps the channel out. Again, extreme greed is back. The boys are back in town. The timeline that we have been waiting for to cross that 75 threshold is here. How long are we about to stay here? And friendly reminder, we stayed in extreme fear for quite a bit of time, meaning to have the market balance itself out, because the market loves to be at balance, swing from one side of the pendulum to the other. We could stay here for a long time, and the market is at all-time highs. The net speculative position did not publish this week because they are screaming bloody murder because, well, simply put, this thing over here absolutely just took him to town, and NVIDIA is not done yet. And not even companies like NVIDIA, right? We're not even talking about the AI companies. We're talking about simple banks are about to do something crazy. We're going to be talking and showing you exactly what the Fed just did, how they silently turned on the money printer. We're going to be talking about AI, the trades that we're going to be looking at the rest of this month, going into the rest of this year, and how the housing market, which will be coming out in a special video for you guys. Make sure you guys are subscribed to that one. How it's about to go absolutely parabolic as well, and how getting in now with a strategy could honestly be the best investment you could do. But anyway, more about that. AI companies are about to make everyone rich. So let's talk about AI. It isn't just hype. It's the next financial mania, and it's only getting started. AI companies are about to get bid to valuation so stupid it makes Tesla's 2020 look conservative. We're not in bubble territory yet, but we definitely could get there if we're sprinting towards it. So again, we talked about NVIDIA, but it's not isolated to NVIDIA. Even stocks like Meta catching an absolute monster bid, getting to new all-time highs. We got Amazon finally being out of the dodo bird territory. Palantir pulled back a little bit, but is just cooling off before it goes on its next run. Similarly, AVGO just busted a new high, broke all-time highs. Can't stop, won't stop. And there's other companies out there, SMCI, AMD, right? We talked about AMD. AMD got one of the craziest like late term bids, right? Coming out of April, up to 73%. That's absolute freaking insanity. But then again, everyone was saying, oh, NVIDIA is trash at 130. It's trash at 120. It's trash at all the time. And guess what? It's up 81% from the low. 81 freaking percent. Oh, guess what? Everyone's revising their estimates now to 200 on NVIDIA when we were saying at 85. This thing was going to be a $200 company by the end of the year. So $200, just to put into perspective, would be a 24% run from its current price. So you're staring at 24%, dead in the face, beating the market, beating real estate, beating everything, and you're not investing in it. So I'm sorry, I can't help you if you're not willing to try things out. And payroll numbers cemented the Fed's tightening that they're gonna not cut rates, right? We saw the CME tool come out and it was not that pretty. It was not, right? In June, we saw there is no rate cut chance. We have to go all the way to September, and it's a 30% chance. This thing goes 21% yesterday. Has now dropped to 66% from 71, leading to traders basically saying October, December, and is putting things in a very precarious situation. But the Fed can tell you all it wants. We'll get into that just a second. I want to go back to the AI trade and kind of explain to you guys where this is going and why the market's about to go absolutely stupid. So the AI trade is coming out this way because everyone is piling in. They missed it, right? Retail was buying down here and smart money was missing out on it. So now they have to get in. They have to pay the premium, but they're not going to let you drive it back down to these sub levels that they got in, because it's just how smart money works. Once they get in, they establish the floor. So welcome to the new floor of NVIDIA. It's not going back down to $120 a share. It's not going back down to sub 140. So kiss that evaluation goodbye. Same with Netflix. Everyone was talking about it and we said, hey, it bounced at $850 a share. And now, well, that's probably doubling your money. Yeah, 50% on a company that's not even in the Magnificent Seven. Other companies that are not embracing the AI trend, like Apple, yeah, catching a bid because they need to, but is this not looking like super healthy for Apple? There's plenty of resistance sitting around at 220 and 250 levels. So again, Apple is one of those laggers and behind. Tesla, unlike Tesla, just having a bad rap. But again, like I was saying, the banks as well taking advantage of it now. Berkshire Hathaway, JP Morgan, and two places that I would love to be in, right? JP Morgan heading into a crazy earnings season. Everyone's piling into it because we're expecting bank deregulation. That is why banks are embracing the AI. Why everyone is embracing AI, because it makes them more efficient. So we're going to make banks more efficient using AI, and also we're going to bid everything up. One of the dampers that could be an amazing opportunity was this piece of news that came out over the weekend, and that was that the US plans AI chip curbs on Malaysia and Thailand over China concerns. So this is going to definitely lead to some more stress in the semi-sector business, because anyone that does business with these countries is going to look at a shrinking of revenue. Again, I will say time and time again, take this as a buying opportunity, because if I have a list of clients that's going to take me 10 years to fill, guess what? I don't care. I don't care if half my client base goes away. That means that's 5 years of demand. Over the next 5 years, those companies are going to keep paying me money because I cannot supply the market with the amount of chips that are needed. So again, the AI trade, in my opinion, is the simplest trade. But if you're going to be a little more conservative about your trades and you really don't want to just dive in head first, well, we can talk about the S&P. And we can talk about the exact levels that we need to cover this week to continue to know if we're going to be bullish or bearish. And you can establish these levels the same way that we establish on every single video out there. And that is simply going to the weekly high and weekly low. That is your levels that you have to cross. And it's pretty clear cut that this thing, we filled the gap in futures again of this previous price point right here. So we're going to probably be looking as a gap down, pump up type week. That is how we're looking to set up. And the levels for the S&P are going to, the NASDAQ are going to be the same story. We're going to go to the weekly graph. We're going to snap lines to the weekly highs, and that is as simple as we're going to make it out to be. Everyone loves to complicate trading. Again, we're going to be gapping down and basing that off of this, which is futures. Again, the S&P was not open on Friday. Futures were open on Friday. So therefore, we have this estimation here of where we're going to go. We basically wiped out all the gains from Thursday on Friday in the futures market, leading me to say that the S&P is going to open up roughly in this gap that was established on Thursday, and leading to a gap and go situation, possibly breaking above 626, new all-time high, continuation of pushing these bears to basically scream bloody murder. Again, they are shorting the market over 100,000 positions, so we definitely have a lot more money to squeeze out of them. We also saw rotation into the Russell, getting back above the 2024 high, so this definitely means that they were seeing a broader breadth in the market. That's why the extreme fear went to extreme green now. So the market is primed for an epic run, and the Fed has lost the script completely. So why are we saying the Fed lost the script completely? If you guys have been listening to this whole entire time, thank you so much for watching. And make sure you guys hit the subscribe button down below because you're awesome, and for more tips like this. For all those that don't know what the Treasury securities purchased by the Federal Reserve in temporary open market operations is, a freaking mouthful. Just think of this as the I'm screaming bloody murder broke fund for the Fed. What it does, it was created during financial tensions, going all the way back to the 2000 crisis. So this shows intervention by the Fed, and it's been basically flat for quite some time, right? So if we go to the maximum, we can see 2000.com, there was a plenty amount of intervention heading into 08, and then basically stopped. It basically didn't come back around or really operate much until COVID, right? Coincidentally, why the banks thought everyone was broke. So we also saw in the last 5 years that during the 2024 crisis, where the bond market and the downgrading of U.S. debt and stuff around August, this facility was used as well. This is where tension is created in the markets. The Fed uses this to push liquidity into the market, stealth QE. And if everything was perfectly hunky-dory and fine, then this facility is not used, but it's being used. We actually had an injection of close to $11 billion in a single day. That is resulting in a lot of money being injected, a lot of QE being injected. And why does it need to be injected? Well, the Fed is finally breaking something, because the bond market is sick and tired of the Fed. And no one wants to transact their money because there's still a level of uncertainty, because Donald Trump hasn't actually made Powell a lame duck yet. Emphasis on the word yet. I personally think that he's going to make him a lame duck based on the rhetoric that Bassett and Trump have both said, which will result in a massive melt up in the market, since essentially he's going to put someone in there that's going to cut rates drastically. Again, he cited multiple times that he wants the 10-year treasury trading around the 2% mark, right? He's like, I want this thing 2 basis points lower, currently sitting at 4.3%. That would bring the 10-year back to around 2%, which would bring mortgage rates more coinciding with 3%, right? Even though we're never probably going to come back into this realm right here, but when the Fed started its craziness where interest rates went absolutely bonkers, that is where the US wants to borrow. They want to borrow in this sub 1.5 to 2% range on the treasuries, and leading to a Fed member or a Fed chair that will cut rates extensively would lead to that. Right now, the market is kind of, we're not going to demand higher rates because we're not expecting rate hikes. We're not expecting higher inflation, even though Powell consistently talks about tariff inflation. Like Bassett said, the only thing transitory about about tariffs is inflation, or something of the kind. Again, quoted him before. It was absolutely an amazing quote for that. But again, Bassett came out and basically criticized the Fed a lot on this. So this leads market participants to believe that, hey, it could be different. But anyway, with that, guys, we're going to conclude today's video. Thank you all so much for watching. Make sure you stay tuned for the more in-depth version of the Fed analysis coming out tomorrow. Make sure you guys are subscribed to the channel. And thank you all so much for this time. And I'll see you in the next one.